Hello and welcome back to Principles of Accounting 1. I'm your host, Dr. B. Today we're going to be talking about accounting information systems. Before we jump into today's lecture, I want to call your attention to the classroom. So, as you can see, we're on our home screen in the classroom. Under course content, we are under Module 2 currently, Week 4. Oh my goodness, Week 4. What does that mean? It means we're halfway through the course already. I know, right? Or you got to remember, this is an 8-week course, so halfway is Week 4. Makes perfect sense. So what does all of that mean? Week 4 is a very, very busy week. Very busy week. Say it with me now. Very busy week. So why is it such a busy week in Week 4, you might be asking? Well, right now we're going to talk about accounting information systems, which includes a discussion board for this chapter. The discussion board has to do with the voucher system. You'll be answering a couple of questions. Just like the previous discussion board, please make sure that your responses are in full paragraphs with references if you can. And make sure that you respond to 2 of your classmates with full paragraphs. That will help you to complete the discussion board. And that will also help you to get full credit for the discussion board. With respect to the next chapter, Chapter 8, we have a quiz associated with Chapter 8. And that Chapter 8 is on the topic of internal control systems. And so we have a chapter discussion board for Chapter 7, which is accounting information systems. We have a quiz, Chapter 8, which is internal controls. And we have the midterm exam. The midterm exam is also due by this Sunday night. The midterm exam, let's talk about that briefly. The midterm exam covers chapters 1 through 8. I will tell you the midterm exam is not very difficult. What do I mean by that? Well, I'm going to show you what the midterm exam looks like briefly. Don't take notes. Okay, there are 10 questions on the midterm exams. 5 of those 10 questions require a computation. It is a mix of true, false, multiple choice. Okay, true, false, multiple choice covers chapters 1 through 8. Total of 10 questions. It is not timed. I don't believe in timed exams. That gives me anxiety. I've taken timed exams in the past as a student, and let me tell you, it is very anxiety inducing. Okay? I don't like anxiety. I'm very anxiety adverse. And I believe most of you are as well. So I try to make life relatively simple for all of you. So I don't like timed exams. I'll also tell you this. The exam is open book, open note. Okay? There's no respondents lockdown on my exams. Because I am a strong believer in your success. What that means is I want you to do your best performance on all exams. So I believe that having open book and open note helps you to perform to your best of your abilities on the midterm and the final exams. So having said that, it's not timed. It's open book, open note. It's 10 questions, mix of true, false, multiple choice, covers chapters 1 through 8. The exam is due Sunday night. Do not be late with the midterm. Okay, I will not accept the midterm exam late. I want you to understand that very clearly. I will not accept the midterm exam late. So guess what? Sunday night, 11:59 p.m. That midterm exam better be submitted. All right. Reason being is I have to report your performance to the university for the midterm scores. So let's recap it. The midterm exam covers chapters 1 through 8. It is a mix of true, false, multiple choice, a total of 10 questions. 5 of those questions require computations. The exam is open book, open note. It is not timed, and it must and I repeat, must be submitted by this Sunday night. No exceptions to that requirement. Are we all clear?
Yes.
Yes.
Full. Sorry I had to beat you up about it, but
Yes, sir.
Yes.
Okay.
Yes.
Wonderful. Any questions on the midterm?
I have a question real quick.
Mark, please.
So Saturday mid-afternoon, can I take my midterm exam on Saturday instead of Sunday? Because I don't have.
Yeah, okay. You can take it early. You can take it now if you want to.
Okay.
It's open. So in fact, everything in this class is open. So if any of you ever want to work ahead, go for it. It's all open. Okay. I'm all about you all
more
doing
than
well.
one attempt.
Angel, yes. Thank you for asking the question. There was only one attempt on the midterm and final exams. One attempt on the midterm and final. Good question. Thank you. Anything else? Oh, one last thing. There's this thing called a mid-semester survey. Bonus points. Yeah, bonus points. Yay. Please complete the mid-semester survey. If you also try to complete that also by Sunday night. The mid-semester survey, what does it do? It's an anonymous survey, okay? I'm asking you all 5 questions. It's about this course. The 5 questions helps me as a professor to continue my improvement. It also helps me to better understand what your preferences are. And it's kind of talking like, how are things going so far, right? And what that does is it helps me to pivot. So like if there's something you want me to do differently, right? If you're like, oh, I wish you would do this or I wish you would do that. This is a great opportunity to let me know that. Yeah. And then I'll try to make adjustments over the next 4 weeks based off of your recommendations. I'm a strong believer in this thing called shared governance. Shared governance means that I look at you all as my constituents, right? And my goal is to make sure that you all are doing your part in learning. And the way to do that is through your feedback. So I sincerely appreciate all of you and your feedback that you provide to me through this mid-semester survey. You'll notice it's worth 5 bonus points. So please take it. If you want, anyway. And that's also for this Sunday night. So yeah, very busy week. So let's go ahead and jump into the content, shall we? Let's begin the process of exploring accounting information systems. Chapter 7. Very short chapter. Very, very short chapter. We'll breeze through this. So accounting information systems. You may have heard the term before. Let me ask you this. What is a system? Who knows what a system is? What is a system?
It's like when you. It's like a system that people for payroll they put into a system like.
Yep.
Is it like a software or a program, something like that?
Yep. Those are both great answers. Yeah. The way to think of a system is a way that we organize information. That's a system. Okay. And how do we do that in modern day? Well, obviously, we use this thing called technology. We use software. A system is a way that we organize information. That's what a system is. It could be a physical system. It could be a virtual system. It could be a concept. Those are all systems. Accounting information systems is how we organize accounting information in a logical way. And the way that we do that in modern day is, of course, through software. So the first thing we'll do is we'll talk about the system. So accounting information system is where we house all of this information. It's a system and a process by which we collect and process information, right? The information are things like the transactions, events, That's the information. We organize that information or that data in a system that is logical and helps to communicate that information in a logical way to decision makers. Moreover, through this thing called financial reports. So think of it this way: we enter transactions into QuickBooks or into Excel or into the computer, right? We enter these transactions in. What we're doing by doing that is we're entering the data into the accounting information system, okay? And that system, when we're done entering all those transactions, and then we go through the accounting process, right? We analyze the transactions, enter them, post them. Then we go into the close process, right? We make our adjusting journal entries. We go through the closing entries, reversing entries, and then we generate our reports, right? Our financial statements. And all of that is done in a centralized system, right? The reports are generated from that system and are communicated to the decision makers, the managers of the company, the supervisors, the stockholders, the SEC, all of the people that need that type of information. And that's what an accounting information system is. And what that does is it helps managers to control cost in information. It provides relevancy. It's compatible across users. It's flexible, meaning we can customize the information that we put into it. A way to view it, like sorting information, right? And it provides a cost benefit. Cost benefit meaning it's very efficient in the structure. The cost benefit to using an accounting information system is we save cost by housing all of our information in a centralized system. And the way we save cost is we don't have a whole lot of people that are having to do that, right? So that's what an accounting information system is. It's a centralized place where data is entered into, and as a result, we receive financial statements.
I have a question.
Yeah, go ahead, Tyler.
I was actually just looking at this. So with the cloud, for example,
Mm-hmm.
be an example of like a system, an accounting information system.
Yeah, so here's an example for you.
Oh yeah, cloud storage. I see it. Okay.
Yeah, storage, exactly. So let's walk through that, and I'll talk about each one. So source documents. We use source documents to enter into the system, right? Source documents, as you recall from the earlier chapters, I think it's like chapter 1 or 2 or 3, something like that. Source documents, what are they? Does anyone remember what are source documents? Any examples? Source documents?
Paycheck.
Paycheck, yeah, that's one. What else?
Payroll.
Tyler,
Also, like
yeah.
the bank statements too.
Bank statements, payroll, yes. Yep, those are all source documents. What about packing slip? Tax statement, yes. What about a packing slip? What about purchase order? What about sales order? These are all source documents, right? They provide information on a transaction that has happened. Okay, so we take those source documents and we take the data from those source documents, we enter them into our system through a keyboard or a scanner or some device, right, to help us to enter the information into the system. And through that, we are making journal entries and ledger entries into our computer information system. And that information is stored, well, in most cases, on a cloud. Now, a cloud is a newer term. It's been around for maybe 10 years or so. Cloud storage. Cloud storage means we're storing that information virtually, not on a individual computer, right? Now, here's an example of this. Let's say your company uses QuickBooks. Okay, QuickBooks is a software. The software lives on your computer, but the information that you're putting in and saving, that information has the capability of being saved to what we call the cloud. It's a virtual storage device that you can access from anywhere, right? Another example would be your email. Your email is saved on a cloud server. That cloud server can be accessed from anywhere. That's how you're able to access your email at home, on your phone, on your tablet, on your whatever. All those emails are saved on the cloud. Okay. The same concept applies when you use accounting software like QuickBooks or Sage 50 or whatever, and you have the capability to save that information on a cloud, and you can access it from anywhere. An example of that would be QuickBooks Online would be an example of that type of service. Questions? Marina? I saw you unmuted.
So yeah, so currently in my job, we are trying to migrate to cloud, but currently what we're doing is just using shared drives across the organization.
Shared drives work they technically shared drives work the same way as a cloud does. What that
Yeah.
means is the idea of a shared drive. Like for example, let's say you're using what is it called? Microsoft Share. You know, the little cloud thingy.
Oh yeah.
What kind of shared drive are you using?
The OneDrive.
Well, yeah, OneDrive is a cloud service. So
So
go ahead, Mark.
it's like how, because I used to use QuickBooks in my previous position. What QuickBooks does is if I'm storing something on QuickBooks, the general manager or some type of manager can go in and look at what we have, the money that we have on file, or
That's right.
how the money we have in our accounts, how we can buy supplies and things of that nature.
That's right. Yeah, 100% right. Yeah, and Marina. So to your point, the cloud, using OneDrive, for example, to save your accounting information, is the same as saying I'm storing it to the cloud, because it's a virtual drive. It doesn't exist on an individual computer, so you can access that from anywhere. It's just a matter of logging into it.
Okay, got it.
Yep. Excellent question. Yeah, no, that's good stuff. And it's good to know that you all are doing that. So we store and save the information to the cloud, and that cloud information can then be delivered by multiple methods. In other words, I can access it from different computers. It doesn't matter where I am. It's a matter of logging into the cloud service online, and boom, there's all of your accounting information. It's really that simple. Tyler.
Yeah, so is cloud computing going to be as important to like small and medium-sized businesses as it is
Yes.
for like larger accounting firms?
Yes.
Okay, because when I was looking through, it said like because it just optimizes the processes that it's important for smaller and medium-sized businesses because it allows like the owners to have more time to,
The
just
short
finish the financial work in general. But it didn't say anything about larger firms, so I wasn't sure if cloud computing was as
100%.
demanding.
Yeah, it's
Yeah, it is definitely. My job, it's over 100 employees, and we definitely use it.
Okay, cool.
yeah. The short answer is absolutely. And as technology continues to evolve, there's even greater importance of understanding how cloud computing works, because we, as an industry, as a people, are continuously evolving as technology improves. So, cloud computing, robotic process automation, um, uh, artificial intelligence, all of these things are super important now. And it doesn't matter if your business is small or large, it's small, medium, or large. It's all going to be equally important that we're all actively engaged in that process. Um, you heard me say the word robotic process automation. What that is we're taking mundane, regular processes like doing journal entries, and making that robotic. And in other words, we're making it automatic, right? So, like, instead of, like, if you have 100 employees at your company and they're all salaried, instead of you sitting down every 2 weeks and entering the payroll transactions, if they're salaried and there's no overtime involved and there's no changes, there's no need for you to continue to make the same journal entry every 2 weeks. You can make that an automatic process through robotic process automation. And I'll say that the technology for that is improved dramatically. So, like, even in QuickBooks, you can set it to repeat, and all of a sudden you have a robotic process. So it really takes the stress out of having to keep doing things over and over again that you would normally do anyway. That's what robotic process automation does.
Okay, I had a
Yep.
question
Yep.
because this is largely about the direction that I want to go with accounting. Is there like, this is a pretty specific question, but is there a way that I can figure out, other than trial and error, like what processes in like the entire, accounting system are already automated and which ones haven't been automated yet?
Good question. That changes so frequently, to be honest. There's so many processes that are becoming automated that haven't been yet.
Right, that's what
Yeah.
I'm thinking.
So the answer is no. There's no real way to do it without trial and error, at least for right now. But the more that things become standardized, then the short answer will be yes. In
Are,
other
are
words,
there like are there like popular like processes though? Like I'm assuming like, again, like I don't know too much about this, but like a computer that like knows how much a employee has worked, or like knows how taxes are supposed to be filed and could do all of that automatically, or is
yeah,
that like not a thing yet?
yeah, no, it is. So
That
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 so that does
Right.
exist.
Yeah, so from experience of mine, we have gone through so many software in accounting, by the way. I've been with my company for like 3 years, and we already have our second or third like accounting system in our job, and so it just takes a lot of like research and just quoting and just
Yeah,
making sure like what exactly does your company need or your business need. So it's all based on what you want to do as your accounting in your whatever you're trying to do in your business.
that's right.
So it's like it's not one size fit all. It's like it just depends on what you want for your company or for your
That makes
business.
sense.
Yeah.
That makes sense. I
Yeah, that's
think I'm
how.
approaching it more on a, not necessarily what I would do for my business, but like a service that I would provide businesses. Because it's
Yeah,
like
Yeah,
I'm
so it's the same. So it just depends on what you want to do.
exactly.
okay. Yeah, that
Yeah,
makes sense.
yeah, that's exactly right. And to that point, not all businesses are the same, and so every
Right.
business has unique needs, and it's just a matter of customizing the software package to meet
Yeah,
those
I think
needs.
that's the most important part.
Yeah, and
Customize.
like there's off the shelf stuff like QuickBooks and whatever else, Sage 50. There's a bunch of fresh books. There's tons and tons of different software, to Marina's
Mhm.
point. And it's just a matter of what are the company's needs, and then trying to match the company's needs with whatever's available.
Okay.
Yeah, and then even then, there's customization. Like, for example, I was doing consulting work for a company in Gaithersburg, Maryland. They're a manufacturer of stem cells, and they sell them to research firms that do research on stem cell technology. And stem cells, they grow and culture in a petri dish. They could go from 1 to 1 million within a matter of a few days. So they did not have a proper way to cost out all of their um, all of their individual steps that went into that process. So what I had to do was find a way to manage the cost process. And what we did is they were using QuickBooks, and I found an add-on software called Fishbowl to effectively manage their cost inputs into the software, and that helped to also automate their process. But yeah, there's
Okay.
so many different things out there.
Okay, cool. Because that was a pretty good example, like analyzing what the business needed and then doing something extra to.
Exactly.
Okay.
Cool. Great. Good conversations. Okay, let's keep rolling. Let's talk about our special journal entries. So, in understanding that accounting information systems involves record keeping in a centralized um, organization through accounting software, the journal entries, the special journal entries we make, like adjusting journal entries and um, other type of special entries, right? And subsidiary ledgers, that process uh, is a lot more organized when we use an accounting information system like QuickBooks or whatever. There's 3M. When I was or M3 rather. There's an accounting software that the hotel industry uses quite frequently. It's called M3. And M3 accounting software in the hotel business helps the hotel to understand the transactions as they interact with the property management system, and the two talk to each other, and that's so important in that business. And in that, when I was back in my day when I was working for the hotel company, we used M3 accounting software to interact with the property management system, to track reservation records, to take care of all of the folios as the guests were leaving the hotel, and reconciliation, right? All of those things were used in this accounting information system called M3. And there were times where we had to do special journal entries for things like sales that were not a part of a group, right? Or cash receipts for our petty cash fund at the front desk. Um, purchases journal entries for recording credit purchases that were one-offs, like I had to run down to get some stamps at the post office using the company credit card, or I had another great example for purchase journals would be you have employees that use expense reports, right, for traveling and things like that. So the purchases journal would be used. Cash payments journaled for various special cash payments you have to make. And then, of course, your general journal for non-special transactions. That would be your end of month closing journal entries. And all of these ledgers, you know, are within that accounting information system to make the reporting process a lot simpler. So there's a couple of subsidiary ledgers. So as you recall, a subsidiary ledger is a listing of individual accounts with common characteristics. The way to think about subsidiary ledgers are they're related ledgers, like accounts receivable, accounts payable. Those are both control accounts. The subsidiary ledgers for those would be the accounts receivable ledger, the accounts payable ledger. Remember, the word ledger is simply a listing of the transactions within that account, right? And so the subsidiary, it's a subsidiary because it belongs to a parent account. Like in the case of accounts receivable, the accounts receivable ledger is the subsidiary to accounts receivable. That's what subsidiary means. Think of it like a parent and child. The child is a subsidiary to the parent, right? And so that works the same exact concept, right? They both belong to the same account. The accounts receivable ledger and accounts payable ledger. Now, the best way to understand accounts receivable and accounts payable is there are individual customers, right, that we have. It's not just one customer in most cases. It's not just one customer purchasing on account from us. We have multiple customers that do that. And each customer has a name. And that name is attached to their account. That's how we track their individual account, right? So in your accounts receivable ledger, your subsidiary ledgers are your individual customers. Okay, each customer is a subsidiary to the accounts receivable. And of course, all of these customers owe us money. Albert, you owe me money. Frank, Jason, pay up, guys. You know, those are my customers, right? They owe me money. They owe the company money. They are subsidiary ledgers to accounts receivable. You see what I'm saying? Their name is the individual account, and that's how I can track every customer and their and what they owe. That's how, when you get that fancy bill in the mail that says you're 30 days past due, your name's on it. And at the company, they have an account receivable with your name on it. So, that's how that works. And the same concept applies with accounts payable. In accounts payable, I have subsidiary accounts with all of my vendors that I owe money to. Right? So, one of them would be, Pepco. Pepco would be a subsidiary ledger in accounts payable, the electric company. WSSC for water. WSSC is a subsidiary ledger for accounts payable. You see them going with this. So the people you owe money to are your subsidiary ledgers for accounts payable. Accounts receivable are your customers that owe you money. So that's how it's all controlled. That's how it's all controlled. And
Question
Marina.
that so
Yeah.
it doesn't necessarily mean it has to be individual for accounts receivable. It can be whoever owes you, correct?
Yeah, so whoever owes you money is a part of accounts receivable. It would be but it would be a subsidiary account. So if Marina owes Dr. B company money, Marina would be a subsidiary ledger within accounts receivable.
So what if I owed a company, like I'm doing work with a company of mine, and it's not actually my money, it's like the company's money? Do I still put it under as the individual, or do I put it under as the business?
Oh, good question. It'd probably be under the business.
Okay.
Yeah, in most cases, because
So
you don't want
is
your
it
name
like
attached to it.
whoever's, do we go by like who's ever like where we getting the money from, like their their bank account or whatever? Do we
It
go by
depends.
that or? Okay.
Yeah, that's a preference of the company. So, it really depends whether you want your name on it or you want the company's name on it.
Okay.
Yeah. Because in reality, it doesn't matter whose name is on it as long as it gets paid. From that perspective. But either way, it's still an individual account. Yeah, good question. And of course, so if I were to add up all of my accounts receivable, I have all these different people that owe me money. I add up all of their totals. That equals the sum of the balance on accounts receivable. And the same applies for accounts payable. I add up everyone I owe money to, add up all of their amounts, and that's the sum of my accounts payable. Sales. So as you know, when we sell something, we debit either accounts receivable or cash, to increase our accounts receivable or our cash, depending on what we're getting from our customer. And we credit sales. When we credit sales, it creates this thing called a sales journal. It's a general ledger account called sales. And there's a credit to sales and a debit to either cash or accounts receivable. So you can see from the sales transactions that every transaction that we make, there's a debit to one account and a credit to another. We already knew that, right? There's a debit account and a credit account. Through the general journal process, there's a debit to one account and a credit to another. So looking at this example, at the end of February 28th, I've added up all of my accounts receivables. And my accounts receivables, 2,150, debit because, it's an asset account, increase in asset, you debit it, right? And credit sales, 2,150. And so I've affected both of those general ledgers. And when you do this in an accounting system like QuickBooks or whatever, it's automatic. So as soon as you enter the journal entry, it'll automatically post to these general journals. So it saves a lot of time, I tell you what. That's why I really favor using an accounting software system over something like QuickBooks. Over something like Excel. Excel is very time consuming. It looks nice, but you'll save yourself a ton of time if you just bite the bullet and spend a couple $100 on a good piece of software. Okay, so proving the ledgers. Proving the ledgers, that's kind of a funny term. Proving the ledgers, all it means is we are verifying that our customers owe us what they owe us. So from this list, I have 5 individuals, individual companies or individuals that owe the company money from sales that we made to them. And I total up all of those individual accounts to get my total accounts receivable. That balance should be reflected in the general ledger and equal to those accounts. So if I add up all of my individual accounts to get my total accounts receivable, that balance should be equal to what's in the general ledger. And that's how we verify that accounts receivable amount is accurate. But again, in an accounting information system, that will be relatively automatic. You don't have to worry about going through that process. Sales returns and allowances. You all remember this probably from 2 chapters ago, something like that. Yeah, let me think back. It goes like 4 or 5, if I'm not mistaken. We talked about this thing called sales returns and allowances. And it was when customers would return product to us. Go ahead, Awa. Did you have a question?
Oh no, I'm sorry.
Oh, okay, no worries. Yeah, just check, just making sure you're okay. Okay, so with respect to sales returns and allowances, as you recall, that happens when a customer returns something to us. It's either broken, defective, or they just don't like it, right? And so we debit sales returns and allowances, and we credit their accounts receivable. Now you see that accounts receivable dash the person's name or the company's name. That shows us that we're properly crediting the right customer's account. You don't want to just credit accounts receivable because you don't know who that belongs to. So make sure it's accounts receivable with that customer's name, the subsidiary ledger, right? Because otherwise, you just credited the general account and you don't know who it belongs to. You don't want to credit someone else's account by accident. I've done that before. And, then you have to go back and try to remember where it came from and you got to go through your, what do they call it? The control documents, right? To find out where it came from. But with this general journal entry, when we debit sales returns and allowances, we credit the accounts receivable. Make sure we credit the accounts receivable, uh, that subsidiary account. So about cash receipts. Cash receipts, always fun. So when you receive cash, instead of selling something on account, we obviously debit cash to increase our cash, and we credit sales, assuming that's where it came from. Or we credit accounts receivable if we're collecting cash from our customers that paid on account. Or we'll credit inventory when we purchase inventory, so forth and so on, right? Cash, as you know, is used in a lot of different types of transactions. I'm either receiving it from my customers, therefore I'm debiting cash, or I'm paying cash for my various expenses, like purchasing inventory, paying my employees, other expenses, right? So as I'm debiting and crediting cash respectively for those types of transactions, the general ledger is running the cash used for that for those purposes, right? And the other side is that respective debit or credit. And so, if I'm debiting cash, I'm crediting another account. We have a couple of examples here. If I debit cash, I have to credit something. I'm either crediting accounts receivable, or I'm crediting sales, or crediting something else, right? But most time it's either accounts receivable or sales, because I'm receiving cash from my customers, usually, unless it's a refund that I'm getting back for something. That happens once in a while too. In that case, there would be a credit to something like inventory or, whatever it is. And we see that how that works, right? The connection. So when you make your journal entry, you're debiting your cash, you're crediting whatever it is, it'll automatically populate these general ledger accounts. And so we're able to verify that. And I'll show you how we do that. So looking at our assets on our balance sheet, we can see that the assets, what am I doing here? Oh, what are we looking at? Oh, okay. So we're looking at our balance sheet and our let me go back here. What are we looking at there? Oh, yeah. So what we're looking at here is we're looking at how our cash is validated. So we have cash, sales discounts, cost of goods sold, accounts receivable, sales, other accounts, inventory. All of these accounts are impacted by cash. And we see that as those changes are being made to both the debits and credits, that the two always balance. So your debits always equal your credits. Purchases. When we purchase, we're typically purchasing something like inventory, office supplies, store supplies. We're purchasing, right? So we debit our purchases account like inventory, we debit inventory, office supplies, store supplies. If it's an asset, we debit it. And then we credit accounts payable or, whatever. In this example, we purchased everything on account. So we debit our inventory or office supplies, store supplies, and we credit accounts payable. When we credit accounts payable, we increase our accounts payable. When we debit our asset, we increase our asset. And then of course, gets paid out through cash. So we see how all of our purchases add up in accounts payable. And we validate what we owe to who we owe the same way that we do it with accounts receivable. We add up all of our individual vendor accounts that we owe money to get our total accounts payable, and we match that balance with what's on the general ledger. And it's really about validating. So a lot of this is just about validating what's in your accounting information system matches with what your records show. And we'll talk about that through the process called reconciliation here very shortly. So just like when we receive cash, we pay cash out. So we debit the expense, or in this case, we debit accounts payable, and we debit the individual vendor account, and we credit cash to reduce our balances with those vendors. Okay, a couple of general journal entries you might make into the accounting information system would include things like the purchase of property, plant, or equipment. We would debit either property, plant, or equipment, or whatever it is the subsidiary account is, and we would credit notes payable and we would validate that through the receipt of the note. We would debit purchase and returns allowances, sales returns and allowances for whatever various reasons. These are all what we call special journal entries. As you would think, they don't occur that often, and that's why through a general journal entry, we would make that directly into the accounting information system to journalize and post transactions with the use of cash. So we talked a little bit about this. There's off-the-shelf software and integrated software. Off-the-shelf software simply means that you can go to a store, whether that be online or a physical store, and purchase software. It's like Sage 50, QuickBooks. These are very standard pieces of accounting information software that we use to record transactions, generate our financial statements, all of that good stuff. And as I had said earlier, it's super important for all businesses, any size, to use accounting software instead of using something like Excel. The reason for that is because Excel is very user error prone, whereas something like QuickBooks or Sage 50, it's not perfect, but it helps to prevent users from making errors. For example, I might accidentally record something in Excel, whereas QuickBooks would catch that error and say, hey, I see you're trying to credit an account that doesn't match a debit. It follows the accounting principles, right? So it's kind of like saying, you can't make this journal entry because it does not follow the accounting principles, right? That's what that software does, is it prevents us from making those types of mistakes. It's not perfect, but it's really good. And then we also have integrated software. Integrated software are typically used by enterprises where the software talks to other parts of the business. For example, in the hotel business, we use this software it's integrated software called M3. That software communicates with our property management system that helps the accounting information system track guest folios. And when those guest folios are closed out, they get posted to their subsidiary ledgers. And all that information gets tracked through the accounting information system. So in other words, integrated software is where you could have multiple softwares that talk to each other, and all of the information is related, right? And it automatically updates. So, and that's very, very common among larger enterprises. Data processing. Processing data simply means that we're entering information into our accounting information system immediately. When you do it online, it gets recorded instantaneously. The minute you hit post or enter, it gets posted. Right. So that's one method of entering data. The other one's called batch processing. Now, when you think of batch processing, the word batch, it means that I'm posting multiple transactions at one time. I typically do this at the end of the day. For those of you who have ever worked in retail, you know what batch processing is. In retail, or even in the hotel, really, at the end of the night, or in the restaurant, at the end of the night, we do this thing we call it batching out. So at the end of the night, you're closing up your restaurant or your retail establishment or your hotel. Let's say you're doing night audit, whatever. You're batching out all of your accounts. What that means is you're posting all of those transactions that occurred throughout the day to the ledgers by this process called batching out. If you think of like a credit card machine, they swipe the card for all of your customers. When you swipe the card, it generates the transaction. But the transaction, typically, wherever you swipe the card at, they're not going to close that transaction out until the end of the night. So let's say you go to the gas station later today, or you go to a store and make a purchase. Then you look at your bank app shortly after, and it says processing, right? It says in process or processing or pending, right? And it'll say pending until it's closed. The reason why that happens is the person that sold you that product, they haven't batched out yet. When they batch out, it'll close it and it'll post to your bank. Otherwise, it'll just say pending until they close it out. They batch it out. And so that's what batching is. And that probably answers some questions for some of you who were like, man, I wonder why it always says pending on my bank statement.
Yeah, it does, Professor. I wondered that too. I'm like, I don't know why it's expensive. Yeah.
Yeah,
Yeah.
exactly. So
And
like when you look at a transaction you've made and it says pending, it's because the vendor hasn't closed it out yet through the batch process. Yeah, good question. Marina, go ahead.
yeah, it makes sense because I actually work so one of my duties as well is actually we have a bookstore implemented in our company, and I always get phone calls saying, why is there two pending? And I tell them that it's not us, it's whoever our payment system is.
Right.
So for example, PayPal. So PayPal is the one that actually takes care of that money part. So I tell them, no, it's not us that we're charging you twice. Basically saying that they have two pending charges on their card. I tell them that it's not us, it's PayPal. They have something that they're doing on their end. So like we have to contact PayPal and let them know, hey, we're seeing that customers are coming back to us saying they're seeing two pending charges, which should just be one pending charge. So it's something to do with what PayPal does, not us.
That's right. Yep. And PayPal is one of those processors that does batch processing. So at the end of the night, PayPal will reconcile their accounts by batching out the process. And that happens too. Like once in a while, you might look at your bank's your bank app, and you'll see two pending charges for the same amount from the same place. That happens once in a while for various reasons. One is whoever swiped your card may have accidentally swiped it twice. Okay, that's one possibility. Another possibility is the processor of the processor that processes the card swipe. They could be doing some maintenance or updates on their end. So
Yeah, it was something to do with PayPal. They were doing something like a maintenance or something. So that's why for a while it's been like
exactly.
that.
Exactly. And then your customers get frustrated because they're like, oh, they must have charged me twice. And then they're calling you and complaining. But, it's just a matter of simply explaining, hey, you know what? Um, you know, uh, check back tomorrow after the batch has been closed. And you'll see that there's only one charge on your account.
Yeah, I let them know that
Yep.
right now if it says pending, it's fine. But if it says posting later, like it's already posted and you still see two, to let us know, we'll
E-
refund them back.
Exactly. Yep. Yep. And that's all a part of that happens a lot in business, unfortunately. But that's one of the things with technology. Uh, Computer networks. Oftentimes, especially in larger businesses, they have these things called computer networks. Hopefully, this isn't new information to you guys. A computer network is a link across multiple computers, giving users access to common databases and programs. Here at UDC, we have computer networks. An example of that would be one that is currently not working properly. It's called MyUDC. MyUDC provides access to multiple computer databases like your Blackboard account, your Microsoft Office account, Office 365, your student account, right? All of these are individual databases. And these individual databases are located within a central computer network. And that central computer network provides you access across common databases programs. Marina, go ahead.
So currently my company uses SharePoint. It's like the Microsoft, I
That's a
guess, version of
database.
like
Yep.
a,
Very
yeah,
familiar with it. Hmm.
yes. And then we go and integrate there. Like we, we have Yammer on there. We have connection to our, like, for example, if for whatever reason our internet's not working, or not internet, our app for our email is not working, we actually go there and use it online on the
Sure.
website instead of the actual app. So, and then there's all other like Microsoft related items in there, Microsoft Teams, um,
Tons.
and
Yeah.
Words, Excel, all that there. So,
Yep. No, that's an excellent example. And so yeah, that's an example of a computer network. It's where you can access databases and programs from pretty much any computer device using your credentials. Yeah, and that's what a computer network is. And the same goes with accounting, right? So if let's say you have multiple teams, you got people in Europe, people in Asia, people in the United States, and they all work for a large organization, and they all process transactions. It's all instantaneous when it's done through a computer network. So if a transaction happens in Asia, I can see it here in the US as it's happening, right? And that's the one of the beauties of computer networking is everything's shared across users. Oh, this goes back to my example. When I told you the story about when I was a financial controller working for a stem cell company. I was doing consulting work for them. So what they did is this stem cell company. The reason why they brought me in is because I have expertise in merging companies together. Okay, so there was a merger and acquisition that occurred where this stem cell company purchased a complementary company that did something similar, right? Similar type of technology, just but it was complementary because the products are different. Same industry, just different products. So this stem cell company purchased this other company, and they brought me in to uh, do the process by which we call. No, it's a different It's a different company. It's enterprise resource planning. Enterprise resource planning is a process by which the organization uh, manages their resources. Okay, so in accounting, accounting software, we use that software to manage our information and our operations. So we manage our costs for all of our products that we sell. We manage our employees and the wages that we pay them. We manage our reporting information through this software. So all of that information is managed in the what we call the ERP, Enterprise Resource Planning software. Examples of that would be Sage 50, Oracle, SAP, M3, Microsoft, QuickBooks, you name it, right? There's so many different ones out there. And these ERPs help the business to manage all of their assets, all of their resources, all of their employees, all of their everything, right? Like you could do payroll through QuickBooks or through all these softwares. That's one aspect of the business is payroll. Another aspect of the business is managing your inventory. Another aspect of the business is managing your processes, right? All of that can be done through enterprise software. I like to think of it as like a dashboard for all of your company's operating activities. Cloud computing is by far one of the fastest growing areas in not only accounting but in the world, so to speak. You'll see this in any industry that you work in. Cloud computing is really becoming the forefront of everything we're doing as it relates to business. Cloud computing is how we deliver information across the world rather than on one individual computer. It is accessed from anywhere at any time on any device. That's cloud computing. So when we're entering transactions on the web, it's not stored on an individual computer, it's stored on the cloud. And that cloud information can be accessed from any device at anywhere at any time. That's what cloud computing is. And in accounting, it's great because, like Mark was saying earlier, the owner can access this information from anywhere. So if Mark is entering his payroll onto the on the internet through their accounting software, anyone in the organization can access that information that has access to it from anywhere at any time, from any device. That's what cloud computing is. There is a ratio that helps managers to understand if their accounts payable is in good standing. Okay, and it's called days payable outstanding. We take our total accounts payable amount divided by our cost of goods sold and multiply it by 365 days. What that does is it tells us the number of days our accounts payable is outstanding. What that means is how many days does it take me on average to pay a bill or to pay my vendor, right? Days payable outstanding. And that information is really helpful for managers to understand if their accounts payable is in good standing. So total accounts payable divided by cost of goods sold times 365. That's days payable outstanding. And that, my friends, is the conclusion of Chapter 7. Any questions on accounting information systems?
Professor, I do have a question.
Yes, so what?
Why is it that sometimes we use 360 or sometimes we use 365? I know we have 365 days in a year, but sometimes when you're doing the calculation, you use 360. I don't know.
Right. That's right. I'm so glad you asked that question. Thank you so much for asking that.
Yeah.
Okay, so here's why. There are 365 calendar days in a year. We know that. We understand that. 365 calendar days in a year. We use 365 for some ratios, and we use 360 for others. Here's the difference. There are 360 banking days in a year. That means that the banks are closed for 5 days out of the year. Those 5 days represent federal holidays for banks. That's why 360 versus 365. 360 represents the number of banking days in a year. There are only 360 banking days in a year, which means there are 5 federal bank holidays in a year.
Oh, okay, I got it now. Thank you so much.
You're welcome. Good question. Very good question.
Mhm.
Thanks for asking that. Any other questions, comments, or concerns as it relates to accounting information systems?
Can I ask another question? It's about accounting too. Are we going to be doing Excel in accounting too?
No, probably not. Since it's an 8-week course,
Mhm.
I don't want you to get too detailed with Excel. We'll probably use a couple of examples using it, but
Okay.
we're not going to get too deep into Excel.
All right. Thanks.
You're welcome. Good question. Okay, I'm going to stop the recording for this chapter, and we'll start the next one here in a minute.